Okay. Okay, so guys, good evening, good evening, good evening. I hope you are all doing well. And how was your day? Guys, kindly share the live, okay? Share the live and let's go. So guys, how was the day? How was today? How was today? Today being Monday, so it looks like the market wasn't really good, but we still managed to get something, right? How was your day? Let me know. Comment. Okay, boring market. Oh yeah. Okay, so like I said in the morning, those of you who joined the morning session, I told you guys, now we are done with the candlesticks during our previous class. So today we are moving on to market structure. I hope my voice is clear. I'm not really fit today, but I promised you guys we are going to talk. We are going to learn. So that's the topic for today, market structure. And how well do you know market structure? When we say market structure, what comes to mind in the first place? Market structure, what comes to mind? When we talk about market structure, we are trying to mean how the market has been structured, how the market is moving, which direction is it moving towards. All right. Whether it is moving in the south or it's moving in the north. Okay, yeah, the second signal it never came. Oh yeah, sometimes you just have to go and sleep. Okay, so for you to be able to know market structure, you should be able to know two things. This is how the market behaves. It goes in highs and lows. Alright, so you should be able to know the highs and the lows. Then you will be able to know whether the market is trading a highs, a lows in the middle, or how it is. You should be able to know. Alright, so simply, market structure is the way the market is moving, or the way the market is behaving, the behavior of the market, the direction of the market, whether it is in a down, I've even said it, whether the market is moving to the upside or it's moving downside. Okay, so we have some kind of this is the market. Okay, yeah, forget about whether it is moving in the downside or upside. This is the market. When you turn to line chart, it's likely you will see something like this. Okay, and if we are to talk about this, we are going to see that here is a high, here is a low, high, low, high, low, high, low, high, low, and high. Do you agree? Guys, do you agree with this? Oh. All right. So we see we will be seeing highs and lows. This is how the market actually behaves. But when we are to know the exact structure the market is, that is where we will be having 3 or 4. Okay, we have 3 or 4 different directions or forms of the market structure. Okay, you are watching me. Yeah, keep watching. So you realize that we have in 3 forms, which is we have the this one is all okay. We have trending markets, guys. Can you see this this color? Or maybe I should use the black. Can you guys see it clearly? Can you guys see the color? All right. And the last one, I think think the black is perfect. Yeah. So we have trending markets, we have ranging markets, and we have choppy markets. When you pick the trending markets, we have in two forms. We have up and we have down. Okay. So when you pick trending markets, you are going to get it in two forms, whereby you will see a point when the market is trending up or the market is trending down. Okay, so we have two forms of trending markets. But when it comes to ranging markets, it is just one. Same as choppy, it is one. But for trending markets, it is two. And if you really want to make some good money, focus on this one. This one we ignore. Choppy market. When you see a choppy market, just ignore it. So what is trending market? Trending market is the market whereby the market, I've already explained, the market is trending or moving in the upside or downside. If it is going up, you see the market going up, or you see it going down. All right, that is the trending market. And the ranging market, it is always, you find the market in a certain range. Okay, you see that it will be ranging like this. And for the choppy, we will go into details. Okay, I'm just giving you the overview of the whole thing. Then we will pick the trending, we explain, we go to the chart, we find examples, and the same thing. And for the choppy market, you cannot really identify like some critical zones. Okay, with the choppy market, it doesn't have any form of direction. It doesn't have a structure. Let me put it in that way. It doesn't have any structure. It doesn't have any form. You will see that it will be moving up, and the other minute it will be moving down. The other second it will be doing something. All right, sideways, moving sideways for ranging market. What I mean is that for trending markets, the markets, you will see that it is moving in the upward direction or a downward direction. That is for the trending market. For ranging, you can also call it either a range or consolidation state. Okay, you can say the market is consolidating, like it is not giving a proper movement. Okay, it will be trading in a range. That's why we call it ranging market. I hope it's clear. Okay, so it will be ranging, or yeah, you can also say it's moving in sideways, like it is going one side. Sideways market. It is you will find it, and you will see that there will be some zones where it will be respected. Okay, so this is the ranging market. For trending, you will see it's going this way or that way, the downside. All right, but for ranging, it will be in this form. And for the choppy, we normally ignore choppy market, and it is difficult for you to spot choppy market as well. But when you spot it, just ignore. It doesn't have any structure. It doesn't have any like a form of any movement. It doesn't really have a specific movement. Okay, it will just be moving anyhow. So when you see such markets, you just ignore. All right, so now let's talk about the trending markets. Am I making some sense, or I'm just talking? Guys, am I making some sense? Okay, so trending. Hey, can you imagine? So for trending markets, like I explained earlier, the market moves either in the upward direction or a downward direction. And for you to be able to identify or say the market is a trending market, you should be seeing the highs and lows I spoke about right from the beginning. Alright, if you don't see the highs and lows, you will not know whether the market is trending or not. And when you find the highs and lows for the trending market, you should also focus. So in trending markets, this is our focus. We have high, we have low, we have higher low, we have higher high, we have lower high, and we have lower low. Alright, so when you pick trending markets, these are what you should be looking out for. And this is what is going to tell you whether the market is moving in an upward direction or in a downward direction. Okay, so if you are not able to see all this, the market is not trending. Guys, does it make sense? If you don't see high, low, higher low, higher high, lower low, the market isn't trending. Is it okay? Too much long wick. It's the choppy market. Hey, bro, repeat your question again. When we get to the choppy market, maybe I can explain for you to get the understanding better. All right, so now you know, once you know this, now let's talk about the trending, the upward direction. Upward trend or the uptrend. Okay, so this is mostly what we call the bull run or the bullish move. So an uptrend is also known as bullish markets. So when you hear someone saying, oh, the market is bullish, the market is bullish, the market is an uptrend, the market is bullish, they are trying to tell you that it is moving in an upward direction. I hope it's clear. Guys, is it clear? And also, for you to know the market is moving in an upward direction, what are the criteria or what are you to look out for to tell you that the market is in an uptrend or the market is bullish? What you should be looking out for is HL. I hope you remember what the H stands for. The HH and the HL. Comment. What does the H stands for? The HH and the HL. What does it stand for? I'm sure most of you know this, but there might be some one person who doesn't know, and that is why I'm taking my time to go through everything. Okay, if we should jump it and just go straight, you should also let me know and we will jump and go quickly. All right. Higher highs, higher lows. So the H is a high, the HH is a higher high, and the HL is a higher low. Yes, that's true. What is a higher high? What is a higher low? A higher high is when the market already has a high. Okay, the market already has a high. There is one high here, and then the market will give you another high which is above the previous high. That is why you have a higher high. Okay, so you first have one H here, and then the market will move ahead, closing above the previous H. Okay, closing above the previous high, and that will give you a higher high. Okay, so if it gives you a higher high, how then can you find a higher low? For you to get a higher low, the market has to come here, okay, but this low will still be higher than this, okay. This low here will be higher than this. That is why it is called a higher low. I hope it makes sense. We have a high, so let me use diagram so that you guys will understand it better. Now the market is moving like this, okay. I think I have opened it too much. Hello? The market is moving, okay, and now it has given you a high. We have a high here. It will come here, give you a low, okay. It will go up here to give you a higher high. Then it will come down to give you a higher low. Why is it a higher low? It is a higher low because this low here is higher than the previous high right here, and it is lower than this high, okay. So it is higher than this high and lower than this high. That is why we have a higher low right here, okay. So when you see this, it tells you the market is trending up. So after a higher low, there will still be another high, and that high will be higher than this, so we will still be having this as a higher high, okay. And another move will occur, and this low will be higher than this and this, so we will be having a higher low. Guys, are you following? My network not helping me, sorry about that. Guys, are you following, and am I making some sense? Okay, yeah. So if you understand the structure, it will be very easy for you to know, okay, looking at the market, this is what is happening. So this is what is happening, that is what is happening. It helps you to make some good trading decisions. Okay? Any questions so far? Any questions so far? Any questions so far? All right, so since no question, let's continue. So now, once you know how to identify a trending, an uptrend, how do we trade an uptrend? That is question number one. So this is the market. Okay, and you can even use your trend line, and you realize that you have a beautiful trend line. So when you say that the market is in an uptrend, we don't jump into the market anyhow. However, you wait. Now we have a high, we have a low, we have a higher high, we have a higher low, higher high, higher low, higher high, higher low, higher high. Okay? Now, where or how are you going to trade this uptrend you are seeing? This is how we go about it. After spotting this higher low, you push, the market pushes up to a higher high. You don't sell. In an uptrend, we don't sell uptrend. So you wait for a pullback, and when the market creates a higher low and it is going to create a new high, your entry, you take your entry right here, and then you target a new high. Okay? And when the market creates a new high, how are you going to see that at this point there is going to be a pullback? How are you going to see that? What you need to do, once you enter the position and it breaks this high, it is advisable to take partial profit. Okay? You take partial profit, then you set break even, allow the markets to run. When you see a reversal pattern, we spoke about it the last time. Either a morning and evening star, a tweezer top, a bearish engulfing, or a pin bar, a doji. When you see any of those formations, then it tells you that the market is ready to create a pullback. So you exit your buy position. Okay? You exit your buy, then you sit back and wait for the market to come here to create a new higher low. And when it is about to make that next impulsive higher high, you take another entry right there. So how are you going to know that at this point in time the market has completed the higher low and a new high is about to be formed? That is another question. What if the higher low breaks the L but not the H? What if the higher low breaks the L but not the H? Bro, come again. Come again. In an uptrend, this is the high. Okay, we have the high started here and the low is here. So if a higher low, this one here, instead of it to create a higher low and it breaks this high, it is not an uptrend, bro. It means that it has broken the structure, so you wait for a pullback and you sell. I hope it makes sense. If it breaks this high, we have this. Now we had H, we had L. The market went up creating a higher high, and instead of it to create a higher low, it broke this high. It means there has been a break of structure. So you are selling in this case. You are not buying. You will sell up to here, and if it breaks this line, this low, then it means the market has changed to what do you call it? A downtrend. Okay? I don't know if I'm making some sense. This is your question. Okay, so now this is a high, this is a low, this is a high. You can draw your lines right here. So instead of this to create a higher low here for another higher high, instead it didn't do this. Can you guys see from that side? Okay. Instead, it broke. Okay, it broke this level right here. Once it breaks here, it tells you the uptrend is not going to happen and the market will sell down. Okay, so yeah, I hope you get it. Yeah, so once it breaks, if it fails to respect this breakout level for you to go up and it breaks this, you are not supposed to buy. Instead, you should be waiting for a pullback here and then you sell. And if you are selling, your stop, you have to take some partial profit right here, because the market can respect this level to give you a double bottom. Okay, it can respect this level to give you a double bottom formation for it. You can sit. For it to push up again. And remember, a double bottom formation is also a good chart pattern, which means bullish. I hope you get it. Bro, is it okay? Is it clear? All right. So let's continue. Once you get it, let's continue. Yeah. So once the market makes an impulsive, this is the higher high. It comes here for the higher low. You enter here. You target a new high. So I asked the question, how are you going to know that at this point in time the higher low has been formed and a higher high is about to be formed? How would you know that? Any idea? Say so omo dey ya betu ani ya alert no ai. Omo dey ya betu ani say confirm whether you are still on live. So me hu anya anya mai be some 30 minutes time. Do ho na do anya for one. So me hu na anya on bend the live. Yeah. Draw a trend line. Okay. Someone says you should draw a trend line. What else? What else? How would you know that the impulse the pullback or the higher low has been formed and a new high is about to be formed? How are you going to know? It has to break the previous higher high. It has to break the previous higher high. Are you sure? Okay, because of time. You have to use PiP. Okay? You have to use Fibonacci. That is why Fibonacci is there to guide you. Okay? You have to use Fibonacci to guide you. That's okay. So, this is an impulsive move. So, the corrective move, you draw your PiP here to here. And you target me, myself. I use 61.8, 50%, and 38.2 levels. These are the levels I use when I'm using Fibonacci. Okay, so exactly by connecting your PiP. Exactly. So I wait for any of these zones. And if the market reaches these zones and it gives any kind of a reversal pattern, it will tell me that at this point the higher low has been formed and a new high is about to be formed. So you take your entry at the reversal pattern. You see your stop loss below right here. Then you target a new high. Any question? Any question? We'll be looking for examples on the chart. Any question before we go to the chart? Okay, so once all is well, go here. I bought it on Saturday in the crowd. Okay, so if you look at this market, this was one shit market that I have seen in a long time. Look at here. From here all the way to the upside. Okay, I hope you guys can see. Okay, it's good. So right from here all the way to the upside, you can see. But for a correct break of structure, let me try and make it okay. I'm supposed to use the other account so that I can cut. All right, now you can see that over here all this level, like it was just ranging. I'll use ranging because yeah, here and here in between the market was ranging here until it broke this structure right here. And after it broke, you see that there was no pullback, so you can't use this for such example. So but for the sake of, let's use this right here, okay, only here, or let's look into the market for a perfect example. But we can still use this because we have a low, we have a high, we have a higher low, we have a higher high, we have a higher low, a higher high, a higher low, a higher high, a higher low, a higher high, a higher low, and then the market busted to the upside. Okay, so in this case over here, the way this market was, you cannot use PiP to trade this market. Okay, if you want to use PiP, you cannot use PiP to trade this market. Why? Because if you look at these pullbacks, there were minor pullbacks. There were no strong, because after the market broke this structure, there was not even a pullback. So under normal circumstance, yeah, so the market was supposed to buy from here 0.6, 0.5, 0.32, in between here. Okay, here was where the market was supposed to buy from, but look at where it bought, 78 level, 0.78 or 0.78.6. that was where it started buying again. So those people who use all this, but on my PC I use 0.6, 0.5, 0.32. This machine is new, so I haven't done those configurations. That's why you see all this. Okay, so in the normal circumstance, the market was supposed to come here at least the 0.5, the 0.661 or the 61 level, and then 50%, 38.2, any of them. Okay, and then you will see a continuation pattern. You enter the buy and you push the market higher. But in this scenario, you can see that there was no major pullback. So let's look at a critical example. Let's look into it. You may find another example. All right. Okay. Yeah, we can even use here. Okay, so look at here. There was a break of structure right here. The market was trending down. It gave a low here, a high. Okay, for it to break this structure, then a higher low, whereby that was the pullback for a continuation push to the upside. So let's try and see PiP right here. Oh, good. So you see this one rested on the 0.5, exactly on 0.5, and then it gave a bullish engulfing. Okay, a bullish engulfing. So your entry is supposed to be here. Once it has hit a break of structure and then a pullback, a continuation push to the upside. Now you saw a bullish engulfing here, so that's supposed to be your entry, and you are targeting a new high above here. Okay, so the extension levels, Fibonacci extension, this is where you are supposed to take your first profit and your second profit right here, your TP3 and the above. Okay, So this is for the swingers. That's how it works. Please explain more about the highs and lows. What app is used for trading? What app is used for trading? How? Bro, explain well, like I don't get your point. Please explain more about the highs and lows. Oh, I think I explained. Let me clear this chat. Okay, I think now it's going to be a bit clear. Is it? Yeah. When support becomes resistance, I didn't even see all this. Okay. For the highs and lows, look here. You will see that at here the market gave you a double bottom, right? It gave a double bottom and it pushed up, breaking this neckline. Okay, it pushed up, breaking the neckline, went up, and this was the pullback candle. It pulled back here, and if you use PiP to calculate this here, you realize that it will rest at somewhere 50%. Just this particular here. Okay, 0.661% level. So after hitting that level, it pushed up, so it gave a new high. Okay, it gave a new high, but this high, this low will be ignored, so we are going to pick this high rather, and then it came for a pullback right here. It went to create a new high. We use significant highs and lows. Okay, when you are identifying a trend, use significant highs and lows. So if we have a major high here and you want to use this as high and this as a low, at the end of the day you are going to miss all this. Okay, so we use significant highs and lows. That's why I'm ignoring certain levels. I hope it makes sense. Yeah, so let me delete the PiP so that the chart will be clear again. So you can see that it went up, created a new high, and even this high broke the previous high here. Okay, so that was the break of structure, and this was the pullback, and you see the pullback gave you a bullish engulfing or even a morning star. Yeah, we have 1, 2, 3, a morning star right here. So your entry was supposed to be here, your stop loss, then you target a new high over right here. Then how would you know that the market is coming for a pullback? Look here, you can see a nice tweezer top formation, right? This is a tweezer top formation. So once you see this, it means a reversal. Okay, so you use your Fibonacci at this point all the way here. So from here, where the impulsive move started, all the way to this point, then you calculate. So in this case, the market came all the way, breaking the 0.5, 0.61, and 0.78. That is where it respected, giving you another tweezer bottom formation. So your entry should be here, and then you target a new high. Okay, I would like to talk to you in private. You can send me a DM. Okay, you can also go to Telegram. If you haven't joined the Telegram community, the link is in the bio. You can join, then you get to know. You can chat me right there. Metaphor X next, many more. Will it be a class? What are you talking about, bro? Can you be my mentor? Oh yeah, I have students. You can join. How to use PiP. Fibonacci, I will have to teach you guys how to use Fibonacci. I will, okay? But not today. I'll teach you how to use Fibonacci as we proceed. What's the best time frame for checking market trend? Okay, zoom it small. Zooming out or in? Which one? because the screen looks small. That's why I'm doing it like this, so that you guys can see everything clearly. The time frame, it depends on the kind of a trader you are. If you are a day trader, you can check the market structure or the trend on daily and H4. Okay, then you use your H1 and 30 minutes to mark your zones and check your entries. All right, for me, I use daily. If you guys have been watching the videos, always I start from daily time frame. Okay, so since I'm a day trader, I use daily to check the trend. Okay, yeah, so do it that way. Good. So once the impulsive move happened, there was a retracement, and you can see there was a double top formation here. So this will trick a lot of people, but if you know this is an uptrend, this will not deceive you much. Okay, this will not deceive you that much. So after that impulsive, let's check something. Come again. Yeah, I'm reading it now. So you see that after he gave a double top formation where a lot of people will be looking for more sells deeper, it hits the 0.5 level or 50% retracement level and gave another bullish engulfing. So if you know from here that the market is bullish, you will look for a buy right here and target a new high, and you see that it broke a new high, even though it took a lot of time. It took 1 2 3 4 5 6 7 8 9 10 11 12 13 14, so 4 by 14 before it broke this structure, and then it pushed to the moon. All right, so once you understand how the market behaves, most of your trades will be right. But remember, it is not always that you are going to get the trade right, even though you have seen, oh, this is an uptrend, this is this, this is that, but the market will still mess you up. Okay, but we are talking about probability. You will get high probability of making good trades. Guys, I hope it's clear. Any questions so far? Any questions so far? Guys, any question? If everything is clear, then we're going back to the charts, the board, and then go into the downtrend. Should we go? And remember, if you go after this class, you have to look into the charts, look for more examples and practice. Okay, if you don't practice and be like, oh, someone said no, please, you don't get it. Why don't you understand, Kwame Bob? Why don't you understand? So that I can take you through again. If you don't go and practice, you will never get it. Okay, you will not get it. You might think you understood, but the market will still humble you. So practice, 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 practice until it becomes part of you. Okay, then you will be good. Okay, you are good. Right, so back to the board. Okay. So a downtrend. And talking about downtrend, we are focusing on this We are focusing on this. Remember, when we were dealing with the uptrend, our focus was this. For uptrend. Now downtrend, this is our focus. Whereby this stands for low. Oh, I made a mistake right here. Okay, so when you are dealing with downtrend, we are looking out for lows, lower highs, and lower lows, meaning the market is sinking. Okay, the market is trading downwards. So you shouldn't be looking for buys in a downtrend. Remember, when we were dealing with the uptrends, I told you when you are in an uptrend, we don't sell. The same way, when you are in a downtrend, we don't buy. Okay, you can do a scalping buy, but the long projection or the long position you should be looking out for is a sell and not a buy. So how does downtrend also works? You are going to see a low like this. It's too steep, right? Don't mind it. Just understand the concepts and you are going to be good. Okay, so we have a low, we have a low high, we have a low low, yeah. Okay, so when you are dealing with the downtrend, this is how it looks like. First of all, you will see a low and then a high which is higher than this low, so we call it a lower high. And from there, you are going to see another low which is lower than the previous low, so that will give you a lower low. Okay, from then you will another push to the upside, but that push will be lower than the previous high, the previous high here. So that is why we call it a lower high. Okay, and from there another push to the downside, giving us a lower low, whereby this low is lower than the previous low. Okay, so we have a lower low, then a lower high, a lower low, a lower high, a lower low. I hope it's clear. So in this case, you draw your trend line upwards like this. It's not that nice, but still manage. Okay, and in this case scenario, your entries here are your entries. Okay, you shouldn't buy. All right, you are not supposed to buy. If you want to buy, it's a scalping buy, but you should be looking for a sell. In this case, you wait. Okay, so there was a low here and there was a high, then the market broke down, creating a lower low right here. So you will be waiting for a lower high here, then you enter right here. Okay, in this case, your FIP, you draw your FIP nicely, then you wait for those levels. Okay, when the market reaches any of them and gives you a reversal pattern, you enter for the sell and then you target a new low. Okay, so after the market breaks the previous low, you take partial profit, then you let it sink, creating a new low, Once you see a reversal pattern right here, it tells you a new high, a lower high is about to be formed. So if you want to hold your position, you just set break even right here. Then when the market pulls back and it is ready to sell again, you add another position right there. Guys, I hope it's clear. Is it clear? I thought I would finish market structure, but I'm not sure we can finish today. Yeah. So for lower downtrend, your focus should be how to sell and not how to buy. Okay, you are looking out for sales, so you wait for the impulsive move to the downside, then a corrective move, then you look for an entry right there. And remember, in this case, you are still using the Fibonacci. Okay, the Fibonacci will tell you at this level there is a potential for the market to sell down, so you look for your entry reversal pattern and sell. Don't just sell. Okay, don't just sell. You will get to a certain level whereby you know, okay, at this level there is 90% chance for the market to sell, so let me sell. When you get to that level, it's your business. Sometimes if you guys monitor the trades I give or the signals I provide, you realize that some of the setups there were no confirmation. Have you guys been monitoring that? Sometimes some of the setups there are no confirmations, but it will play nicely. Why? And it's because I have been doing series of backtesting, okay? And during that backtesting phase, there are zones. There are zones when the market reaches there, surely it will bounce. Okay? About 90% of the time it bounces. So I know that even if one fails, out of 10 trades, I will lose 1, I will win 9. So all the time, once I see those patterns and those zones, I will shoot with or without confirmation. I hope you understand that part. But if you haven't done such back testing, what you need is to wait to see a reversal pattern before you go into the markets. Okay? Indeed, I wanted to ask you about that. Alright, so I've answered you already. I hope you are clear. Yeah, sometimes you need to spend much time with the markets. Okay? There are days I don't trade. I will just be sitting here from morning till evening with this. Just watch the candles play out. Okay? If you are not trading, you can still just there is a saying that you have to show up every single day, no days off. It's not like you should trade every day, place the buys and sells, no. But every single day you should watch the market, because there will be a time where you will see a certain pattern. Okay.
The issue and issue.
No, it's my doing. There will be a time you will see a particular pattern which you have never seen it before. When you are watching the market, you will see them. Okay? Then you note them down. That is why it is important to show up every single day. So guys, any question about the downtrend before we switch the chart and look for examples? So like I said, when you are in a downtrend, your focus is to wait for this move to happen, then you sell it down. You wait, you sell, you wait, you sell, you wait, you sell. So you are using Fibonacci, that is 1, trend lines, that is 2, and also your zone markings, 3. Alright, because most of the times when the market breaks a structure like this, it pulls back to that same level and sells down. It breaks, It pulls back, it sells down. It breaks, it pulls back, it sells down. Okay, most of the time this is what happens. So you combine your FIP plus your zone and then possibly a trend line. That's what's going to give you multiple confluences or multiple confirmations. Okay, sometimes there are trades when you see them, like you can enter, go and sleep, you will come back and meet your profit. Have you seen some before? Most of the times. Guys, any question about the trend, downtrend before we look for examples on the chart? Any question?
Life will end in 1 minute.
This is what I was talking about.
No much you have to.
Yeah.
Now start.
But continue. Say, yeah. Did the
Without your notice.
Yeah.
Oh, they know. Is there any
they assume I'm watching. And I have to confirm that.
That's a time.
Yeah.
Oh,
I think so far we've spent about 1 hour. 1 hour. Check it.
1 hour, yeah.
1 hour, 2 minutes. Yeah. Guys, any question? Okay, if there is no question, let's go to the chat.
Maybe now we use I7. Because here. What's she really?
Open the case here.
It's a minimum use now.
Oh, okay. When I'm a i7, because i7 now the screen is like anything. That means I want this big screen.
13 inches and
okay. It's going to be a like as a very don't think it's too much more.
yeah.
Guys, can you see it like this? Is this okay or it should come a little closer?
I don't think what TV now.
I was going to screen now.
Okay. I see. I say now percent.
Yeah. Guys, is the view okay? Sometimes you expect a retest, but it breaks. Exactly. That's why I told you guys. I told you that there is nothing like 100% guarantee. There is no guarantee that your analysis will go in your favor. Okay? There is no guarantee. You will see a nice break of structure, but it will still break again. Okay? You will see a nice break of structure. I will see if I will get example. But we are talking about downtrends, so let's focus about downtrends. If you look from here, okay, you look from here, you realize that the market was bullish. Okay, so it created this high and it went here to created a low, right? So instead of it to create a new high which was above this, it couldn't. It created a low which was lower than this high. So we have a high, a low, a lower high, okay, and now you see a lower low breaking the previous low. Okay, so once this low is broken, it tells you that now there is a bearish move, and after that a lower high was created right here. Either you use this or you use this. Significant high is this one, and then another low, nice low right here, a nice high, and a low, a high, a low. And you see that when the market got here, it gave triple lows, right? It gave triple lows, and after that, boom, and there was a break of structure here as well. And if you look at it, you see what happened? It retested that low and boom, it changed. So the SMC people will tell you change of character, right? Change of character. So once you see that there has been a break of structure from the uptrend, you wait for the lower high, then you sell it down, okay, for you to create a new lower low. After that, a lower high and a lower low, and you see that the previous low here, let me show you something. Look at this low and look at this low. So that's why we have, so this is a lower low, this is a lower high, this is a lower low, this is a lower high, and you see that this high is higher than this high is lower than this high. That's why here is also another lower low, lower high, and then we had equal lows, and boom, to the upside. Is it clear? Let's look for more examples. Let's see each one. This account, I have not subscribed to the trading view. I was supposed to use the other account. Can we use this? Okay, let's see something. So from here, you see that it was pushing up, right? So we have a low, a high, a low, a high, a low, a high. Instead of it to create a new high, it couldn't create a new high. It created a high which was lower, or this was even an equal highs, right? This is an equal highs. And then it closed, a low created here, okay, we had a low and another high right here. So here was where the structure got broken. Let's try and see something. Are you guys following? That means the lower low is the pullback. Yes, lower lows is a pullback, not the lower low. Disconnect. The lower high is the pullback, not the lower low. Hombre. But I sure say it's you. Okay. Yeah. So bro, the lower high is the pullback. When you are in a downtrend, lower high is a pullback, not the lower low. Okay? When you are in an uptrend, the higher low is the pullback, higher highs is the next target. Okay, so when you see this is we had a high and a low and a lower high. So this was the pullback to test this break of structure right here. Okay, this pullback was testing the break of this structure, and then you see a new low was formed. Okay, and then another high higher than this, lower than this high. So this was a lower high, and then a lower low lower than this was formed, and the lower high lower than this high, and you see another low was formed. So you just have to follow the pattern just like that. Okay, and you practice. This is not really clear, but if you get the mental picture, that is all. You can look into it, multiple charts. Okay, you can go and check multiple charts and you get them perfectly. Okay, so if you look at here, this is a nice uptrend. Gold has been bullish. That's why I'm not really getting. Let's see if you can get. Okay, so US 30. Good. US 32 is bullish. It's bullish. Yeah. Guys, which pair is bearish? Which pair? Okay, let's check USDCHF. Let's check USDCHF. USD CHF is supposed to be bearish. Do I have it here? Or even USD CAD. USD CAD might be bearish as well, because it's not bearish. Can you see what I am doing? Let me check. It's not really clear. Okay, but guys, I hope you understand. Like, do you get the point? I'm trying to get a bearish market, but they are all proving difficult. This is a bearish market, okay? This is a nice bearish market. I don't know how. Let me go there. Yeah, so if you look at this one too, you can see that it has been creating highs and lows, a low, a high, a low. This one, a low which is lower than this, significant. You are looking at a significant lows. So from this low, the next low which closed above the low here, that is this low, and then it pushed up a little, a high, and then formed a new low. It came back a new lower high, and then a lower low. Okay, so basically that is how to spot when the market is trending low and when the market is trending high. Any question? Should we add the ranging market to it, or we should close for the day? 1 hour 30 minutes, I think it's enough. Oh yeah. So probably tomorrow we are going to handle the ranging markets and the choppy markets. So we did trending, uptrend and downtrend. So tomorrow too we are going to do the ranging and the choppy markets. Then we'll be done with market structure. Then maybe on Wednesday we will start with support and resistance, definitely. Then you guys will know how I draw my zones, how I mark my zones and everything. Okay. Oh yeah, it's enough. Let's go and sleep. So guys, if you have any question you can ask. If you don't have any question, that's the end of today's class, and probably tomorrow we are going to meet. But like I said, make sure you practice. Okay. Oh yeah, we will. Make sure you do more practice. If you don't practice, it will be difficult for you to understand and for you to know how they works. Okay, so practice. You can just spot them, take a screenshot, send to me on Telegram. I will look at it for you. Okay, I will look at it for you. If it is okay, or if you have to do it, there are certain things you should do, you do it. All right. Yeah, so on this note, that's the end for today. And remember, I spoke to you guys about that 1% target. I want to do something. Okay, are your lessons this same time? Yes, 6 p.m. Ghana time. Okay, 6 p.m. So I'm trying this whole week. We are going to have classes every day. This whole week is going to be every day. And from next week is going to be Mondays, Wednesdays, and Thursdays. Okay, Mondays, and or Tuesday, Wednesdays, and Thursdays. I've forgotten. Unless you guys, I go back and check. Okay, so with regards to the 1%, I want to establish a group, okay, whereby we are trading only prop firms from now to December, and every month you are buying a new account. Okay, you target 3%, you withdraw, you use part of the profits to buy another account. Trade copiers will be given out, trade managers will be given out as well. The trade manager is called like trade panel, how to know your risk to reward and everything. All those tools are available and will be given to you guys. Trade copier, whereby you can use to trade multiple accounts and many more. Okay, so stay tuned. I'm preparing everything, so once it is completed, I will post for you guys to see. Then we take it from there. We are starting on 1st April. We are starting in April, so next week, I think Tuesday 2nd, right, or 3rd. I think on the 3rd or something. Yeah, that's where we are going to start. So if you don't have your prop account, get your account ready and let's keep the ball rolling. All right, so guys, thank you all for coming. Have a good evening. If you want to reach out to me, go to Telegram. You can get my WhatsApp number on my profile as well. 2nd, yeah. So we are starting on the 2nd February all the way to December. And December, if you are buying 10K account every month, you are going to make at least $5,000 by end of December. Okay, so it's something that's going to help you together with the tools, as long as you are going to remain faithful and disciplined to yourself. Okay, because if I tell you with this particular setup we are trading just 0.25 and you go open 0.5 or 1% and it messes your life, it's your own account. I wouldn't see, but at the end of the day you are not going to achieve the goal you are supposed to achieve. All right, so when it is ready, I will let you guys know. Have a nice day, and God willing, tomorrow we shall meet. Okay.